Hello, Zach here with this month's Carbon Collective newsletter. It has been a big month for us. We've brought on a lot of new members onto the platform. We are so grateful to have you, and it's a really good place. It has now been 1 quarter. It has been 3 months since we actually launched our Carbon Collective portfolio. So in this newsletter review, this newsletter digest, I want to go ahead and look back at those 3 months of how it did, and then also share a couple of articles that we found inspiring. So how did they do? How did our Carbon Collective portfolios actually perform in the real world? We, up until when we launched our portfolios, had only done backtesting, and this is really important in terms of portfolio building and understanding kind of the risk and reward balance and getting that correct. And we had seen that our backtested results had largely met our goals and that they had tracked the market, and if not done a little better, but really we wanted a way to track the market, excuse me, with a way that is truly climate friendly and is low fee and diversified. So we launched our portfolios on October 18th. And when we look from then till now, we can see that they performed quite well, returning 11.8% if you had invested back on October 18th. Now, if you're a Carbon Collective member, when you get that return would depend upon when you transferred money and when it hit the account. So if you had transferred, say, before the new year, then you would have seen your account go up in this big rise. And similarly looking back, this Carbon Collective portfolio is an 80-20 portfolio. So it's 80% stocks and 20% bonds. So let's go ahead and compare it to the same index of the US total stock market of 80% stocks and the US total bond market of 20% bonds. And what we can see here in blue is that we see a lot of the same patterns. We see the same rises and falls. It's tracking the market. But we can see beginning in mid-November, our portfolios start to do a bit better. And especially after the Georgia Senate runoff, they do considerably better in that time. Up until this point, which is a frozen slice in time, in which our portfolios have done about 5% better than the overall market. This is great, but do please remember that past results are no guarantee of future returns. So this was a good spot for us to look back and reflect at how our portfolios have performed, and we'll be doing so in the future updates. For the next article, this is an action that is something that is really easy for any of us to take, but can have a really big impact. So Uber and Lyft have been rolling out a new service which allows you to pay $1 more, and you can request a hybrid or electric vehicle to come and pick you up. Uber's is called UberGreens, and Lyft is called something similar. And the reason these companies are doing this is that they actually have a really bad carbon footprint. This has been studied by NRDC and other groups, and Uber driver or an Uber ride on average has a higher carbon footprint than an equivalent taxi ride, or definitely than taking public transportation, which is a lot of what it replaced. And a lot of the reason is that Uber drivers and Lyft drivers often commute from very far from where they live. So I live here in the Bay Area, so Uber and Lyft drivers will come from Sacramento all the way into San Francisco in order to do their days driving, because the rates are so much higher there. So it makes sense financially for them, but in terms of all the gas that they burn and getting there, it's a much higher carbon footprint to bring that car every day to San Francisco. So why is this important? This is one of those opportunities where you have a choice. If you're going to take a ride share with Uber and Lyft, which I know in the pandemic a lot of us aren't doing, but let's say afterwards, you have a choice to pay that extra dollar or to not. And every time you pay that extra dollar, you're both rewarding that driver for making the choice of having bought an electric car or a hybrid. And you're also sending a signal to Uber and Lyft that I want more of this. If you do more of this, I will be a happier customer. And that's powerful. Uber is pledging $800 million to help drivers transition to electric vehicles. We need that number to be a lot higher because we need America's America's fleet of cars to transition to electric as fast as possible. So next time you go to request a rideshare, if you see the option, pay the extra buck. It goes a long way. Our final story, this newsletter, is looking at some of the latest climate science. The headline says it all here. Global heating could stabilize if net zero emissions achieved. Why is this a big deal, and what does it mean? What this means is that if we are able to successfully transition our society away from fossil fuels, so our cars are using electricity that is powered by solar power or wind power, Same thing for our ships. All of our electricity, we've electrified everything, that we don't need to burn stuff in order to generate electricity and do the things that power our society and continue moving it forward. What that will mean is that global heating will stabilize. In the article, one climate scientist compares this to a sink, and that our global emissions is water going into the sink. But things like wetlands in the ocean and forests, they're carbon sinks. So the drain is actually open in the sink. But right now the problem is the water is turned on really high. And so the water is filling up faster than it can drain. But if we turn down or really turn off the water, then it gives the opportunity for that drain at the bottom to start lowering the amount of carbon. So this doesn't mean that if we decarbonize, we will solve climate change. We've already baked in a fair amount of warming given all of the emissions that we've done. But this does give us time to be able to deploy additional technologies afterwards to take that additional carbon and help it sink down faster. So we find this really inspiring because it's our mission at Carbon Collective to help you align your finance with reaching this goal of decarbonization and ultimately solving climate change. So we'll have a lot more to come on ways and advice of how you can decarbonize your own life and participate in us reaching this global goal. So thank you so much for watching. We'll be back with our next newsletter sometime in February. If you ever have any questions about Carbon Collective, please feel free to email us and respond to this. We'd love to hear from you.